Greetings, everyone. Welcome to Liberty Call. Today is Monday, August 7th, 2023. I hope everybody had a fantastic weekend out there in the interwebs. It's a pretty nice day here again in Colorado. We had a little rain over the weekend, but got some chores done. What else did we do? Watched a lot of baseball. The Astros split with the hated Stankies. But, they were in both of the games they lost. They just couldn't scratch a few more runs across. But is what it is. They look pretty good. We got JV back, and so heading into the final home stretch to the end of the season, I feel pretty good about it. So, anyways, if it's your first time watching Liberty Call, I'm glad you're here. We're going to talk about what happened in the markets today. I'll go through the weekly economic update, the market recap, and some new IRS rules. Hey, isn't that awesome? But first, if you could, give me some thumbs up, like, share, subscribes, follows. Hit that notification bell, and let's go ahead and jump into the numbers for today. Kind of a mixed day globally, much better here domestically. The Dow Jones was up 1.16%, 407 points, closed at 35,473. The S&P 500 was up 0.89%, closed at 4518. NASDAQ was up 0.61%, closed at 13,994. The VIX fell 7.54% today. It's currently at 1581. Canada was up 0.57%, Brazil was down 0.15%, and Mexico was up 0.07%. Over in Europe, Germany was flat at down 0.01%, UK was down 0.13%, France up 0.06%. Let's see, Netherlands down 0.08%, Spain down 0.1%, Italy down 0.14%, Switzerland up 0.08%, and Portugal up 0.27. So kind of a muted day in Europe, kind of hugging the flat line. Let's see here. Russia, both of their exchanges were split today. The MOEX was down 0.27. The RTSI was up 0.13. And the overnights in Asia, the Nikkei in Japan was up 0.29%. Australia down 0.22%. New Zealand down 0.24%. In China, the Shanghai was down 0.59%. The Shenzhen Component down 0.83%. China 50 down 0.58%. DJ Shanghai down 0.63%. Hang Seng down 0.12%. And the Taiwan weighted was up 0.9%. So it was kind of that, and the Nikkei were the few bright spots over in Asia overnight. All righty. Well, let's go ahead and jump into the market recap, or I'm sorry, not market recap, the weekly economic update. All right. Stocks retreated last week as bond yields increased following the Treasury's announcement indicating, quote, a larger than expected funding need, end quote, and a downgrade in the federal government's debt rating. The Dow Jones Industrial Average dropped 1.11%. The S&P 500 was down 2.27%. NASDAQ lost 2.85%. And internationals fell 3.27%. All right, stocks struggled as investor sentiment turned cautious amid rising bond yields. Markets were rattled initially by news that the Treasury raised its borrowing requirement for the third quarter by more than $250 billion, and on news that the Bank of Japan announced it would allow bond yields to rise after years of capping them. Rising yields continued to pressure stocks in the wake of a surprise rating downgrade of U.S. government debt by a major credit rating agency due to its belief in expected fiscal deterioration over the next 3 years. Stocks rebounded Friday morning, rising on a modest employment data, only to reverse and add to the week's losses. Mixed signals from the labor market. Fresh employment data last week gave some conflicting signals about the labor market. The new JOLTS report showed a small decline in job openings and layoffs in June, leaving 1.6 job openings for each available worker. The ADP employment report reflected strong private sector hiring with 324,000 increase in jobs, exceeding the consensus forecast of 175,000. The government's monthly employment report saw a cooling in hiring as employers added 187,000 jobs in July. This was slower than seen in the first 6 months, but enough to shave the employment rate from 3.6 to 3.5%. All right, economic data this week. On Thursday, we have the Consumer Price Index and Jobs Claims. Friday, we have the Producer Price Index and Consumer Sentiment. And we have a handful of companies reporting earnings this week. Today on Monday, we had Skyworks Solutions. Tuesday, we have Eli Lilly, Duke Energy, and UPS, and also Oniok Inc. Wednesday, we have Walt Disney, and that seems to be the major companies reporting earnings this week. All right. Let's go ahead and jump into the recap of today's market. U.S. stocks are rising as investors focus on earnings and the inflation report. U.S. stocks began the new week on an upward trajectory, recovering from losses suffered in the previous week, which saw the NASDAQ composite drop 2.9%, the S&P 500 declined 2.3%, and the Dow Jones fell 1.1%. These losses were prompted by disappointing job growth figures for July and underwhelming hardware sales from tech giant Apple. Investors are now turning their attention to key inflation data scheduled for release later this week, which could provide insights into the Federal Reserve's future policy decisions. The Consumer Price Index for July is expected to show an annual acceleration to 3.3%, while the core figure, which excludes volatile items like food and energy, is projected to slow to 4.7% on a year-on-year basis. Additionally, producer prices due to release on Friday are anticipated to rise by 2.3% from the previous year. The current week's earnings focus is on the entertainment sector, with companies like Walt Disney, News Corp, and Fox expected to report their quarterly results. Disney has faced challenges with disappointing film releases and struggling theme parks. Amidst the ongoing second quarter earnings, over 84% of S&P 500 businesses have already reported, with a significant portion exceeding Wall Street estimates. Well, Disney's problem is that they decided to go to the woke side of things a few years ago, and that's really kicking them in the nuts today. When you're going to cut off, how many woke people are there really in America? Maybe a third at most. I think a lot of the people on the left are just kind of go-alongers. They don't want to be the kind of person who is viewed as having a contrary opinion, so they just go with the flow. Think of how many people stuck those needles in their arms over the last 3 years, or wore those stupid rags on their faces just because they didn't want to be made fun of. So I'm not like that. I don't care what people think. All right, back to the news. Monday's corporate earnings announcements features software maker Palantir and entertainment firm Paramount Global. In the oil market, prices retreated slightly from 4-month highs, but remained elevated due to plans by major producer Saudi Arabia and Russia to extend output cuts for an additional month, aimed at tightening global markets. Yeah, so if you're going to be mad at Saudi Arabia for the prices of oil, and also our own government by restricting the amount of drilling that's allowed here. Let's see here. While last week's losses prompted concerns, the positive start to the new week suggests that investors remain cautiously optimistic as the focus shifts to key inflation data and corporate earnings reports. Market participants are closely watching for indicators that could influence the Federal Reserve's future monetary policy decisions and provide insights into the overall economic trajectory. All right, good stuff. All right, next up, this comes from Zero Hedge. It's titled New Inherited IRA Rules Mean Heirs Could Be Left with Large Tax Bills. That is not good. All right. The IRS has introduced new regulations regarding inherited IRA accounts, potentially leading beneficiaries to face substantial tax liability starting next year if they fail to meet the withdrawal conditions outlined by the agency. An inherited IRA is established when an individual inherits an IRA plan involving the transfer of assets from the original owner's IRA to the new account. Beneficiaries of inherited IRAs are subject to taxes on these accounts. Previously, taxes could be minimized by beneficiaries through spreading withdrawals over their projected life expectancies. However, the enactment of the Setting Every Community Up for Retirement Enhancements, the Secure Act of 2019, put an end to this tax-saving strategy for individuals holding inherited IRAs. The rules differ based on whether the inherited IRA is traditional or Roth. Those who inherit a traditional IRA on or after January 1st of 2020 now have two options. They can withdraw the entire amount as a lump sum and pay the taxes, or transfer the funds to an inherited IRA that must be depleted within 10 years of the original owner's death. Yeah, because used to you could stretch that out over your whole lifetime. The Secure Act also dictates withdrawal procedures for inherited IRAs based on whether the original account holder initiated required minimum distribution withdrawals. If the original owner passes away before being required to take RMDs, the beneficiary can make withdrawals at any time, provided the account is depleted within 10 years. If the original owner passed after the RMD initiation date, the beneficiary must take the RMDs between the 1st and 9th years, depleting the account by the 10th. Failing to withdraw RMDs as stipulated leads to a penalty of 25% of the unwithdrawn amount, which can be reduced to 10% if the missed withdrawals are completed over the following 2 years. Although penalties were waived for tax years 2021 through 2023 due to initial confusion, beneficiaries will face penalties for non-compliance from the next year onward. Beneficiaries inheriting Roth IRAs, unlike traditional IRAs, are exempt from taxes on withdrawals or RMD withdrawals since the original owner did not take them. The revised secure rules only apply to non-spouse heirs. Individuals inheriting IRAs from spouses can treat their accounts as their own. Non-spouse heirs inheriting prior to January 1 of 2020 can continue to benefit from the old regulations. So, Dad, if you're watching this, you don't have to worry about it. Non-spouse heirs, RMDs, are calculated based on their life expectancy. Estate taxes may also be considered be a consideration for inherited IRA beneficiaries. Estates exceeding $12.92 million in value will be subject to estate taxes in 23 compared to $12.06 million in the previous year. Beneficiaries can claim an income tax deduction for estate taxes paid on the inherited IRA if the estate is subject to such taxes. While an inherited IRA distribution is taxable income, beneficiaries can offset this with an income tax deduction for estate taxes paid on the account. This deduction can significantly reduce taxable income, even if the beneficiary did not directly pay the estate taxes. All right, so new rules out there. If mom or dad or grandma die and you inherit an IRA from them, just pay attention. You got to have that account depleted within 10 years now, which in the old days, you could just stretch that thing out forever. So, all right. Well, that's everything I had for today. If anyone needs anything from me, please go to dsafinancialgroup.com. All my contact information is there. I hope you have a wonderful evening, and I'll talk to you next time. Adios.